Welcome back to Trading 360, everybody. Thanks for being with me. I'm Nicole Petalides. Time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts, and here to take us through the trades is Mike Shorr, Director at Trading Education at Prosper Trading Academy. Thank you so much. All right, let's start off here, Mike. We're looking first at Lowe's. Tell me a little bit about why this one's on your radar.
So Lowe's have been in a nice little range here, and today, on Friday, it got right to the 50-day moving average, gap up today over that. Tried to test that again early, did not, it held. And so I'm looking at that as support. And if the overall market supports that, I think that's a really nice one. We don't have resistance until about the 198.60 area. So I like that play to the upside.
Understood. Okay, there it is right now at 188. Ben, your thoughts on the chart? Good morning to you.
Good morning, Nicole. Mike, how you doing? We are trading 188, hey. Nicole, currently up on the day by about 1.5%. And, you know, when I look at this, I see ticker symbol LOW on the 4-hour time frame, first and foremost, trending lower, testing an upper extreme. So giving the bulls something to get encouraged about, but not necessarily taking out anything key that was established on the way down yet. Here you can see on the 4-hour again, the migration of value to the downside and how we're right at the upper extreme of that range that we've been forming. I've got it numbered here as number 5. This is a well-defined trend lower from 263 all the way down to 169. And Nicole, I want to point out that, well, basically since mid-June, we've been trading 169 to this 185 level. So this is the range we're in. This is a significant test of the upper extreme. But until we take out the middle of balance area, number 4, the 193 up into that 195, 196 area, I think we're still, the working assumption that we're trending lower is still a valid one. Here you can see on the daily time frame, we talk about how these areas of value and migration of value helps us determine trend, but it also, Nicole, helps us when we're not establish when we're not trending lower any longer. And in this instance, as we take a look, I just want to show you. Here you can see the middle of balance area number 4, while we were forming 5, that's kind of what we had our eye on and some of the weakness we've seen since. So again, the bulls basically had the heads up that we were no longer trending higher when we broke down below 230, the 240 area. We went a bit sideways there for a while, but here you can see again that price decay that's ensued since. That's the move that we just looked at again a minute ago from 263 down to 169. I do want to point out here on the weekly, we're back to levels we haven't seen since March 2021. So, again, the significance of this, we're talking about basically essentially halfway back from the pandemic lows from 60 up to 263. This was a significant move to the downside. Guess I'm just not sure that we've, invalidated this kind of short-term trend lower off that 263 level and really found any footing here to kind of resume that longer trend to the upside that we had seen. This is going back all the way to 2012.
Yeah, and I think that when you look at these trends here, right, you see that top, but then coming off, but you're watching that 50-day too, right, Mike?
Yeah, and I think that we've highlighted kind of that same area. The trade that I put together is just till August 5th. So remember, these are not investments for me; these are trades. And so this is 2-3 week trade for me that I am actually targeting that 95 at that 195 area. So I'm looking at that 190, 195 call spread, but using that daily support or off the daily chart at the 50-day moving average as my rationale for the breakthrough. So do I think that we're going to go and make new highs? No, but that's not the aim of this signal that I have.
Understood. And when you look at themes or fundamentals or what's going on, not just looking at technical analysis, Mike, what's your thinking there?
The consumer has held up their end of the bargain, and I think they're going to continue to do so. Prices are higher, but does that, when we've seen this in the pandemic, that when prices are higher, well, then we kind of have that circle the wagons mentality, and let's make things, if we're not going to be going out to dinner, if we're not going to be taking that second or third vacation of the year, which are extremely expensive, just go try and buy an airline ticket anywhere, make your house nicer. Right. And so I think that trend should continue. And if it doesn't, well, then we have more money to spend on other stuff too. But I don't think it's counterintuitive to what I'm trying to accomplish here.
Right, and other money to spend maybe on your Starbucks. You're watching that one too, potential breakout, right?
Yeah. Yes, very, very similar, except a different moving average. it's been holding its 50-day moving average. And then today we see that gap up through the 100. Again, gap up through the 100, pulled back, tested it, and now we're almost at today's highs right here. So Starbucks does have earnings coming up, so I'm not looking for a decided move up. What I'm more looking for is holding that 100 as a holding period going into earnings, that they're not going to take it lower than this and they're going to go sideways. So I'm really just selling the downside as opposed to buying the upside on this one.
Okay, so you see what he's doing there, Ben. Your thoughts?
Well, Starbucks, guys, is in a similar pattern in terms of the trend environment on the 4-hour, the well-defined migration of value to the downside, testing the upper extreme. Now, we just looked again at lows, which is actually trying to break out of that upper extreme. Here you can see how still a little bit of room to the upside here before Starbucks finds itself in a similar situation where we could say we're actually breaking out. The high that I'm looking in terms of gauging that is the high from the beginning of May. If you remember, we were trading up around that $82 level, so we'll call it 83-ish. But here you can see 4 areas of value that formed at lower levels at this point. So the kind of line in the sand right now in terms of determining that this working assumption that the market's trending lower is no longer a valid one. That would come right in this area here. Again, anything up through this, we'll call it $86 to $90 level, would be a bit concerning for the bears at this point and encouraging for the bulls. Now, the daily time frame is a step away from the 4-hour. I've got my eye on this range that we've been in basically since the beginning of April. It's right around that $83 to the upside to the $68 level to the downside. But you can see here, we were just talking about the trend environment lower in Starbucks, basically the move that we had highlighted from 117 down to 68. Here you can see that's just part of the bigger move that's actually been playing out here again from up around 125. I've got the weekly time frame in similar fashion in terms of what we looked at as far as lows. You can see the significance of the pullback. You can see how Starbucks is now back to levels we haven't seen since August of 2020. So again, in a similar fashion, I mean, big move off the highs here, not 100% that we've actually bottomed out at this point yet. We still haven't really taken out anything significant that was established on the way down. Just kind of establishing a bit of an area of value here again, kind of range bound here at this point, and basically just testing the upper extreme of it.
Yeah. And the fact that we're going back to those August of 2020 levels, after that nice, beautiful, exciting run up, it's just hard to, I know what you're saying when you're saying trying to test the upper extreme, but just not sure you saw the bottom. Mike?
Yeah, and I think that, I think I've been asked about new lows probably 100 times in the last week. Have we put in our lows? Have we put in our lows? It seems that way. That doesn't mean that we go and make new highs or even appreciable new highs. I think that we need to see a lot more data, especially on the inflation side, where we got a taste of it last week. Not great, not horrible. We don't see an acceleration, but I've yet to say, that's probably the top of prices. It doesn't feel that way, especially, energy is going to move that entire thing. So if you're watching for prices, everything is more or less expensive and dependent on those energy prices.
Right, understood. Last but not least here, we are looking at Adobe Systems in the tech sector. Mike, why is this one jumping out at you?
Yeah, so, I'm looking for a fade here. That Adobe has shown a little bit of life here, but as opposed to the other 2 examples that I had, this has not even gotten to that kind of value area yet, and if it does, it is proven that it hasn't been able to break through it. So I'm actually looking for a fade in Adobe. As much as I love Adobe, it's not acting that greatly. So so I'm looking to fade that move with a put spread up at the 50-day moving average, which is up at 391 and change. We're not there now, but that would be one to the downside, that it is not showing that sort of breakout pattern that I showed you in the other 2.
Understood. And Ben, what do you think here? I mean, people are having a hard time believing in some of these tech stocks right now.
Well, I can understand why. I mean, I think one thing that's been supportive of prices, or at least slowed the momentum to the downside that we were seeing into the beginning of May and June, was rates kind of tapering off that momentum to the upside, right? They've started to consolidate and been somewhat contained, 3.5%, and the 10-year yields down to, call it 2.6, so they've been mostly sideways. And, this is one I can understand why Mike's not as enthusiastic about this, because when you take a look at Adobe, basically since the beginning of May, we've been in this range, we'll call it 450 down to 338, and how we're struggling to get through the middle of it, right? I always talk about when you get through the middle after a test of the lower extreme, you can open up a door for a retest of the upper extreme. But in this instance, we're kind of running into some resistance up around this 392, 395 area. So if we roll back over here, yeah, it just lends itself to kind of a retest of that lower extreme in this instance. Again, a failed attempt to get through the middle. But here you can see well-defined migration of value to the downside. I've got 5 pretty easily identifiable areas of that overlapping and kind of rotational type price activity relative to the more horizontal type price activity that's pretty well defined as we broke out, if you remember, back in December of last year. We're talking down and through that $600 level. That was a high conviction move lower, but step back from this more granular, or I'm sorry, intermediate time frame. The 4-hour shows the daily. Remember we were talking a minute ago about how in terms of that move at Starbucks, we mentioned again how these areas of value not only help you identify trend while it's in place, but also help you identify when it's no longer in place and when that working assumption becomes invalidated. And basically off the pandemic lows, we saw a huge run up from the 250 level all the way up to $700. But look at what's going on here. Since we've basically worked our way through, again, this middle of balance area number 1 through the 500 to the 475 area, you can see that we've continued to struggle, price continued to decay, and here you can see it on the weekly time frame. Pretty good look at the bigger picture. Again, just pointing out here Starbucks, Adobe in this instance, back to levels we haven't seen since May of 2020. So coming off here, again, a significant move and really no indication that this trend lower that we've seen off the recent highs is slowed, but also pointing out that this could possibly be part of a bigger, longer-term uptrend here, just on that daily, again, really unrelenting here to the downside right now, and on the 4-hour for that matter.
Yeah, and as you said, when you see the conviction moves, it's really evident what's happening. And then you have consolidation, and then you have uncertainty which way it really could go at that point when it starts to move around. That being said, you have a bearish fade at the 50-day moving average here. Mike, tell us a little more about that trade.
Yeah, so I'm looking at the, sorry, got pulled off my screen here. Yeah, I'm looking at that regular August 355, 360, 370 broken wing put fly. So, not looking for a huge move or anything like that, just looking for it to get to that support area, or excuse me, that resistance area, and then falling down from there, and with a very, very low risk and well-defined possible profit area right back where we want it if it settles back into that range.
Okay. And Ben, what levels are you watching here this week on the S&P 500?
Well, Nicole, I like to take a step back when we're kind of chopping around, and for me, as much as it's a wide range, 4,200, the highs from last month, down to around 3,639. I think everything within that's very random, again, wide range, and there's opportunity to make money within these, rotational type trades, but right now, just not seeing a lot of conviction here as long as we're within that range. Again, it's the June highs, the June lows, 4,200 to 3,639.
Okay, June high, June low. I wrote them. I'm going to watch them all week, Ben. Thank you both very, very much. Good to see you, Mike. Thank you for those big 3 great names there. Lowe's, Starbucks, and Adobe today. Appreciate it, gentlemen. Have a good week. Mike Shorr, Prosper Trading Academy, and our own Ben Lichtenstein. Coming up next, we're going to